I'm going to teach you a simple trading strategy that I use to make $500 to $5,000 every single day trading in the stock market. My name is Emmanuel. I'm a seven-figure day trader, and I've been using exactly what I'm about to show you over the past 5 years every single day. And my father, who was my mentor, who taught me how to trade, has been using this for close to a decade. Unlike a lot of the trading gurus out there, I actually do this full time. I trade live every single day, and this is what I do for a living. I'm gonna hit you with so much value and practical trading concepts that you'll be able to implement literally as soon as this video ends, that you'll question why I'm even doing this for free. And to answer that question, it is because I am genuinely trying to help you. I want you to become a profitable trader. My goal, the reason I'm doing this, is to lead the next generation of profitable traders. Let's not waste any more time and let's jump into me making you a better trader. So these are my Charles Schwab statements, and the reason I'm showing you them is to be as transparent as humanly possible. If I'm going to be teaching you how to trade, it's important for you to understand that I actually make money doing this, and I like to be as transparent as possible. I want to be as real as possible, and I want to show you the actual proof that I do this for a living and that I do this every single day. So in October, I made $15,036. This was in 2024, and I was actually in Italy for half the month, and that's why it ended up being a bit of a slower month. November, I made $77,571, and you could check the cash activity, the beginning balance, the change in market value, the ending balance, and all that good stuff. I also show you my withdrawals from the account, but November was an excellent month for me. December was another very good month. I made $53,051. January, really good start to the year. I made $73,656. And in February, which was 2 months ago, I made $68,955. And if you're wondering where my March statement was, which was, last month, well, Schwab actually hasn't created my statement yet, but I was hovering just around $30,000 in profit. March was a bit of a slower month for me. And so far in April, it's been an excellent start to the month. The market literally collapsed, which actually creates a really profitable trading environment for me as a day trader. And I'm up a little bit over $25,000 in the first 4 days of April. Most of my profits literally came from the last 2 days, Thursday and Friday, where I finished $8,000 in profit on Thursday, and I made a little bit over $13,200 yesterday. If you guys want to see my daily results every single day, I post them on my Instagram story, so follow up on my Instagram. I also show, a ton of trading education there, and I give you guys kind of a real life perspective on what I do every single day as a full-time trader. So make sure you follow up. It is M Trades. It should be on the screen, and send me a DM saying that you're coming from my YouTube channel, and I'd love to potentially talk with you and even answer some of your questions. I don't want to waste any time. I want to give you as much information as possible in this 20 to 30 minute video so you could actually begin implementing and using this strategy as soon as tomorrow. And the first step of this strategy is we're going to zoom out and look at the daily chart, the daily time frame, where every single one of these candlesticks represents 1 day's worth of price action. I always like to zoom out first, look at the higher time frames when I'm analyzing a stock or if I'm looking for a potential setup. And what we're going to be scanning for is for a very specific type of gap. Now, what is a gap? A gap is an overnight change in price. So let's say a stock closed at $10 yesterday, 4 p.m. Eastern, when the stock market closes, and the next morning at 9 Eastern time, it opens at $20. That difference in price that occurred overnight, where it changed from $10 to $20 the next day, that change in price overnight is called a gap. And the reason I like to trade gaps is because they prove to be a catalyst for that stock. It increases the momentum for that stock because gaps usually occur for specific reasons. It could occur because of news. It could occur because of the market dropping or the market going up. It could occur because of earnings, where companies report quarterly earnings. Those earning reports reports can, change prices overnight because investors, they buy or sell based off those earning reports. Or it could happen because of the CEO saying something, like with Tesla. Elon Musk is always kind of, tweeting and talking, about things people may agree or disagree with. That causes the price of Tesla to change overnight, right? It could be for all sorts of reasons. But we don't really care why the gap happens. What we care about is, what effect does that gap have on the charts? What effect does that gap have on price action? In other words, the relationship between the buyers and the sellers. That's ultimately what price action is. And based on how it's gapping on the chart, that gives us information. That gives us a bias. It gives me direction on what I want to do for that day, or how I want to trade that stock, whether I want to go long or short, or whether I'm going to be looking at it in the first place during the trading day. So we are looking for a specific type of gap that we're about to get into. But some examples of gaps, just so you have an idea of what they look like, is right here. So this stock, let me make this white so you can see it. Perfect. So this stock closed at around 475 the previous day. And then the next morning it opened at around like 410, something like that. This literal gap is an overnight change in price. All right. This is what a gap looks like. You'll literally see a space in the charts. And this happens in the stock market because the stock market is not a 24-hour market. Gaps do not happen in 24-hour markets like crypto. Here's another really good example. All right, and we'll make this black. So this stock closed at 550 the previous day, and then the next day it opened at around 480. There is a gap on the chart, all right? And you could see how much that stock moved on the day of the gap. This is why I like to trade gaps, because gapping stocks have more momentum. They move way more. There's a catalyst, whether it's an earnings report or some news in the company or the CEO saying something. There's a catalyst for its movement. And I want to trade stocks that have a catalyst because they actually could move. And as a day trader, I want to trade stuff that is moving. Okay. And that's why I focus on gapping stocks. Here's another really good example. All right. Where this stock closed at like 25 something the previous day. The next day it opened at around like 29.50. We saw a massive drop first, and then this set up as a retracement opportunity, and then we ended up continuing much higher. All right, and this is why I like to trade gaps, because they actually move. Okay, now we're going to simplify this, and I'm going to give you a specific type of gap to look for, and that we actually saw during this past week when the market literally just collapsed. We saw a market crash, and I saw this gap on the daily chart of the market, and we're going to be looking at it and analyzing it. But this type of gap is called shock value. It's a shock value gap. Now, what is shock value? This is a gap that shocks the buyers or the sellers, a gap that surprises the buyers or the sellers. So essentially, let's say we get a green bar, right? This is where prices opened at that day, right? Open. And this is where prices at that day. All right. And then the next morning, we end up gapping beneath the lows of this green bar. We gap underneath this green bar and we open here. And that's really what we're looking at, right? Because when it's the morning, we don't know what the prices are going to do yet, right? So let's say it's opening right directly below a green bar. This is what we're looking for, and I'll explain why once we look at some examples on the chart. But this is what shock value is. You get a massive green bar, you're stepping up to the plate, sending prices higher, we close up here, and then all of a sudden the next morning, we open below that green bar. And you can kind of already see how this creates shock, because we're surprising all of the buyers who bought it the previous day. And you'll see quite, how powerful this is in just a moment. But the same thing applies the opposite way, where let's say we have a red bar and we opened up here, right? Then at the end of the day, we closed here, where the sellers brought prices lower. And then all of a sudden, the next day, the next trading day, when the stock market opens, we end up opening right here. All of the sellers who shorted it the previous day are now underwater, right? They're seeing prices open up above this red bar, and this gap, literally this overnight change in price, creates, once again, shock. it creates a surprise for the seller. So we're looking for a gap that either surprises the buyers by gapping down or surprises the sellers by gapping up. And these can be such powerful opportunities. I cannot even explain how powerful this gap can be and how it can create just A+ opportunities to make money. It is absurd, and sometimes it's simple, right? When you get a super powerful shock value type of gap, you could almost go short, go long, close your eyes, and you'll be able to make money. It could really be that simple and that easy to make money with this strategy. And of course, there's no easy money in trading, obviously, but so we're about to look at an example of this. All right, so let's go to the daily chart of the market, and I want to show you guys something that we saw this past week. So we saw a perfect example of a shock value gap literally this past Thursday in the stock market on the stock market crash. And I'm going to explain exactly what a powerful gap. So we're going to be looking at this right here. So the market started to drop, and then we had a nice gap down to around 461. By the way, we're looking at the Qs, the NASDAQ. So this is the tracking ETF for the NASDAQ. So we gapped the 461 and we ended up getting bought. We had 3 green bars in a row. We had a ton of buyers that came in and that said, hey, this is probably the market bottom. I'm going to bet money this is the market bottom and I'm going to begin buying. And that's what they did. We got 1, 2, 3 green bars in a row on the market. And then what happened on Thursday? All of a sudden we gap from, what is this? 476, and we open at 456. And we have this overnight change in price right here. It's a little bit sloppy. I'm seeing that we closed 25, and then the next day we opened at 450. Okay, this overnight change in price was unbelievably powerful because it literally trapped every single buyer that bought it the past 3 days. Everyone who went long here is now waking up to their position underwater. In other words, losing money in their position, and they are down, right? And this adds a lot of selling pressure because if you're waking up and you're seeing that your position is down significantly, whether it's on the market or in individual stocks, you're gonna start to freak out. Think about it. If you're waking up and your thing is down, your position is down, let's say, in the market 4% is significant, but let's say you're down 10% on your stock, 20% on your stock, since that's going to put pressure on you to cut your losses and sell. And then let's say this stock begins to drop, right, as it did with the market. It kind of popped at the market to drop, began to drop. That's going to put even more pressure on you to begin selling because all of a sudden you're waking up and you're down, let's say 10K, and then all of a sudden it starts to drop. Now you're down 12K. Now you're down 40. You're seeing your losses increase. That puts additional pressure on those buyers to cut their losses and sell their position. All right. And that's exactly what happened, where we ended up kind of moving higher a little bit. We started to drop. And then literally the next day, which was yesterday, we gapped down up from 450 to 437. And then yesterday we had a massive red bar of selling. And part of the reason this happened is because we trapped so many buyers on this move up with this gap down. And I saw this gap, gapping below 3 green bars on the daily chart on Thursday. We're gonna go lower. I literally made a TikTok video saying this is an extremely bearish gap. Maybe one of the most bearish gaps on the market I've ever seen. And we're going to go lower. This is not the bottom. We are not going to get bought here. We are going much, much lower because when you trap this many buyers, especially on something like the Qs on the market, 3 green bars in a row, you gap down below them, you're trapping a lot of people. It puts so much selling pressure on top of the fact that we already dropped 12%. We're already in kind of a bearish sentiment, right? With all these tariffs and with everyone panicking over the economy, this gap just kind of poured fuel onto the fire and we got sold off extremely hard after that, all right? And this is why this gap is so powerful, because it traps the sellers and it creates this like snowball effect of selling, right? And that's what happened here. Literally snowballed, and we got sold all the way to 2 days. Because of this gap, we dropped that, which on the Qs, on a market ETF, that is tremendous, right? That is tremendous. Maybe on an individual stock, that's not like the end of the world, but like on the market, that's massive, right? We're down literally over 21% from the highs. Insane stuff. And it all happened literally because of this gap. And I recognized this. And on, these past 2 days with this, extremely bearish gap, and I was able to go short, and I made, a little bit over 22,000 in 2 days. Friday, I made a little bit over 13,000. All right. Now, this is on the market. Let's look at some examples of this on individual stocks that I actually traded the past few days. One of them that I thought was really just amazing was the Under Armour, the UAA. So let's understand what happened here. We moved up. This was, I think, Monday, Tuesday, Wednesday. We closed at like 660 on Wednesday. And then all of a sudden the next day we opened at around 596. So we gapped, we opened below these 3 green bars. Everyone who bought it these past 3 days is now trapped, right? Because it's opening below their entries. They're all losing money. So everyone who thought this was the bottom, they're now waking up to their position underwater, and that just adds so much selling pressure to the stock. And then the next day we got hit with a massive red bar, and this thing dropped 10% in a single day, which is, still pretty significant in the stock market. And I was able to capitalize off of this opportunity, and I was able to, all right, really, really good example. Let's look at one more, the WBD. This is just, look at this thing. So a Monday, Tuesday, Wednesday. So green bar, red bar, and then Wednesday, another green bar. And this is the green bar I'm really looking at. We opened at 10:06.54, so somewhere around here if you guys are seeing the numbers on the side. All right. And then on Thursday, we gapped from 10:56 to 10:03. We gapped literally perfectly below this green bar. Every single person who bought it on this day is now trapped underwater, right? They are shocked. The buyers are surprised. And this thing literally dropped from, it opened at 10:03, right below this green bar, and dropped from 10:03. And the next day, it gapped down again and dropped all the way to 8:00. This one gap sparked literally a move on WBD, right? So we could day trade this, we can swing trade this, but it was because of the gap, right? And essentially every stock gapped similar to the market, right? Almost every stock ran up with the market on Wednesday, and then the next day it gapped down underneath that buying, and it trapped all of those buyers, right? Think about it. You're waking up where you're let's say you bought it at 10:06 on Wednesday in the morning. Now it's up to 10:50. You're feeling good, right? Maybe you're up a little bit, right? You're up 4 or 5% on your position. You're feeling kind of good. Maybe you caught the bottom on Under Armour. Maybe it's going to start an uptrend and continue higher. And then all of a sudden the next day, not only does it negate all of your profits, but now you're down. And then it starts to drop from 10:02 to 980. That's going to add so much pressure on you to sell. Think about it. What would you do and follow? The market's falling as well. It's just going to add pressure on you to sell, and it creates a snowball effect of selling. And that's why these gaps are so powerful, because they trap, they surprise, they shock the buyers or the sellers. Now let's look at another example of when a gap surprises the sellers. So let me go ahead and find it. So we are looking at Roku, and this was months ago. I think this was literally in like 2023 or 2024. But Roku had a massive red bar on this day. Massive. It literally started moving from 73.30, and it closed at $68, right? So we had a big red bar, dropped like literally 8% that day. And I'll tell you, the next day, this thing opened directly above that red bar. What do you think happened, right? We literally gapped from $68 from the lows of this red bar. We opened above this red bar. And what do you think happened? And I will show you. I'm going to unpause it and look at that. So we opened at literally 75 the next day, and then we got a massive green bar to the upside. We literally moved 20% in a single freaking day. Why did we move 20%? Because we moved lower. The sellers came in. What happened the next day? The buyers stepped up. We opened above this red bar. We trapped every single seller, every single person who sold or who went short, right? All of them. Someone sold this day, then they're seeing it open up at the next day, right? And then they feel FOMO. They feel like, oh my God, I sold too early. I missed I didn't sell at the right price. Maybe this thing is going to go back in. And it creates this now snowball effect of buying where all of the people who went short are trapped, and maybe the people who sold are now feeling FOMO. And we saw just a massive green bar that day, and then we continued higher the next 2 days. We got a 30% move higher in the stock in 3 days because of this gap, because we trapped the sellers who sold or went short in this red bar by gapping up over it the next day, right? Let's go back to what we're looking at, right? We look for a red bar or a gap beneath a green bar, right? Or we're looking for a gap up above a red bar. And that's exactly what we got here. We got a gap up above a red bar, trapped everyone here. And then same thing with the other examples that we looked at. Let me exit this bar replay. And the same thing here. We trapped all the buyers by gapping down at green bar. You guys get the idea. Now, what is the next step in this process? Let's get right into it. Okay, so the next step in this process is actually extremely simple. So what did we just do? By looking at the daily gap and identifying a shock value type of gap, or you can call it maybe a surprise gap, whatever you want to call it, right? We identified the shock value gap. And we did this on the daily time frame. So the 1 day time frame, okay? This gives us the bias of what we want to do for that day. So before the market opens, before Eastern hits, that's when the market opens, we look at where prices are opening. We look for gaps, right? So on this day, right, on UAA in the morning, I saw that we were opening at 595. The previous day, I saw that we closed at 660, right? So I knew that, hey, we're opening below 3 green bars. We're only 5 below 3 green bars. This is a shock value gap. This is an interesting gap because we're trapping all of the buyers from the previous day. I'm going to watch it, and I'm going to watch it as a short. And the same thing that I just showed you with the Roku, where we gapped up over that red bar. Well, before the market opened that day, I saw that we were gapping and opening above that red bar. So that gave me the bias that that stock is likely going to continue higher for that day. The gap gives me the bias before the market opens. And then once the market opens, this is what I do. And what I do is I go to the smaller time frames. I go to the 1, right? I go to the 2-minute chart. This is specifically when the market just opens, like in the first, let's say, 15 to 20 minutes of the day. Then I go to the 5-minute chart. Then I go to the 15. I look at the smaller time frames, and what do? I find a setup, okay? I find a trading setup that I trade. Now, I don't want to make this like a 2-hour-long video talking about all of the setups that I trade, the exact qualities that I look for in them, and I much rather you just watch my free 10+ hour course, okay? It will teach you in depth what setups I trade, exactly what I look for in them, the exact qualities that separate a high quality setup from a low quality setup, just everything you need to know. That's in my free 10+ hour course. So you could find that in the description of the video, and it'll just teach you all of this setup. It'll also teach you which time frames to look at, and it'll go super in depth with this. So you could just watch that. All right. So that's in the description of this video. Make sure you watch that. All right. Next. But I'll give you a quick little rundown. The 2 setups that I essentially trade are breakouts or breakdowns. Move up, we base, then we have a breakout, and I'll look to go long, or the opposite. It goes and moves down, then it bases at the lows, and then I'll look to go short. Or it could be even a potential retracement setup where we move up, we retrace, we get a buy setup, and we move higher. or we move down, we retrace, we get a sell setup, and we move lower as a short. These are the only two strategies I essentially trade. They're so freaking simple, and that's what really allows me to make money with my trading, is that I keep it like stupid simple, right? I trade breakouts, I trade continuation trades, right? Which essentially is we move up, base, continue higher, move down, base, continue lower, or we move up, we correct in price, continue higher, move down, correct in price, continue lower. I trade continuation setups. I also do trade reversals, but for this example and for shock value, we're mostly trading the continuation of the gap. Where it gapped up, we're looking to go long, or it gapped down, we're looking to go short. Breakouts and breakdowns and retracements. Really, really simple. And like I said, if you want to, learn this super in depth, I would just watch my free course. It's in the description of this video. Just watch that. But that's what I do. And then I find a setup, and then I capitalize, right? So let's go back to those trades, right? Let's go back to on this day, on the day of the gap. Let's see what setups we got, right? So I would go, so let's say it opens 9:30 a.m. I go to the, let's say, 1 minute chart, and I would look for a potential opportunity. Now these charts look super messy, this messy on Thinkorswim. Just TradingView kind of sucks. But for example, I would go to the smaller time frames and I would find a potential setup here, right? So in this case, I teach the strategy called a high-low, where essentially you go short or long above or beneath the first candlestick that opens. So in this case, I would go short beneath that first candlestick as my entry, and I would put my stop loss above that first candlestick, and then I would have caught this move lower. So you could do it like that. And if you go back to the 1 minute chart, it was kind of super sloppy, but you saw that we had, it's just super sloppy. It doesn't look like this on Thinkorswim, but I remember on Thinkorswim, we had like a 1 minute consolidation, and then I essentially went short under that 1 minute consolidation. But that's the idea. We go to the smaller time frames and we find potential setups. You're not always going to get a picture perfect clean setup that I trade or that I teach in my free course, but we look for setups. Now, what you could also do is scalp these plays, right? And I actually just made a scalping video a couple weeks ago that's on this YouTube channel that will teach you how to scalp and teach you what I look for when it comes to level 2 order flow. So you could even scalp this gapping stock, this shock value gap, right? You don't have to just trade it as a chart where you just get in, place a stop, and it moves. You could literally scalp it off of level 2. Let's look at WBD. I'm sure I think this one had a much cleaner setup. All right, so let's go ahead and look at the daily time frame. All right, so this is on the day of the gap, right? So it opened at $10. I was super interested in it, and then I went to the smaller time frames for potential setup. Now let's see, do we have any potential setups? So we have a couple here, actually. We have a bunch of potential setups. Number one, right off the bat, it attempted to move higher, got rejected. You could have went short under this base, entry, stop loss above the base. That was an option, right? Maybe not the cleanest setup, but there was a setup. Maybe you scalped this off of level 2 order flow, and you did it like that. That works as well. Maybe this thing dropped, it based, and you went short underneath the lows here, stop loss above this pivot, and then you would have caught the move lower as well. Or maybe you shorted it underneath this base right here, right? Maybe it's a little bit more clear on the 15-minute chart. But yeah, maybe you shorted it underneath this base, just like that. Now, these are not picture perfect setups, right? I actually have a better example right here. Perfect, like right here. This is a really, really good example, okay? So this is a shock value gap. We closed the previous day at 550. The next day we opened at like 480, right? So on this day where before the market opened, my bias was to go short. From there, I went to the smaller time frames and I found this setup right here. And this is a much cleaner looking breakdown, all right? Where we dropped and then we had a base and then we continued lower. So my entry would be underneath the base, stop loss over the base. This is a much, much cleaner setup. It's a much more identifiable breakdown, right? Where we dropped, we based, we continued lower. That was a much better breakdown opportunity, much better example. But you guys get the idea, right? We're not always going to get picture perfect setups, right? But the whole point of this video is the gap. understanding the gap, and then from there we go to the smaller time frames and we find a setup, whether that's a breakout or a breakdown or a continuation, kind of 1, 2, 3, you know what that is, or whether it's a level 2 scalp. I would watch my most recent educational YouTube video to learn about that, right? The point is, you can get creative with how you want to trade it, but the point is the gap gives the stock just tons of momentum, and you literally, it's just such a powerful opportunity. And from there you go to the smaller time frames and you find a setup, right? In this case, it could be a breakdown or a level 2 kind of scalp, or all of it combined, right? Like on this one, I remember this was an amazing breakdown, plus it was an amazing level 2 order flow type of scalp. So when you have all of these factors literally combined, right, where you have amazing gap, right? Let's say you have an A plus gap, plus you have a setup that's A plus. Market is aligned. The market's also moving lower, A plus. Plus you get a level 2 scalp, that's A plus. You combine these together, you get an extremely high probability setup, like unreal high probability. Almost like for me, some of these trades that I take 90% of the time, you know what I mean? Because I'm able to identify what I like about the setup. I find a really powerful gap with it. I find a good setup. I see what the market is doing. You know, are we aligned with the market? I find a good level 2 trade, level 2 scalp, and all of those things combined just create unreal opportunities. And in a lot of cases, guys, you could use this for swing trading. Like in this case, WBD, literally, look at this. In 2 days, 20%, right? So you could use this for swing trading and use this. All right, guys. Hopefully that makes sense. That's really all I wanted to emphasize in this video. And it's actually really simple, guys. I know I yapped a ton in this video, but it's really quite simple. You find an A plus shock value gap. You go to the smaller time frames and you find a setup. That's really what we're doing here. We find a shock value gap. We go to the smaller time frames and find a setup. Which smaller time frames? The 15-minute, 5-minute, 1-minute, or 2-minute, maybe even the hourly, okay? Or we find an A plus shock value gap, and then we go and we scalp it off of level 2 because we know that it has shock value, it surprised the buyers or sellers, it's gonna move a ton, and if it's moving a ton, it might be scalpable using level 2 order flow, and we make money that way. But that's the strategy. It's really simple, all right? And even if you can capitalize off of it. Right, there was a stock that I saw a couple weeks ago. I forget what it was. I'm not sure if I'm going to be able to find it on Thinkorswim. It was see if I could find it. Okay, I was able to find it, but check this out right here. This Serve stock literally was making new highs at $23, and then the next day it gapped all the way to 1460 right here. That is just insane. Think about all of the buyers that were trapped during this move up. And the point that I'm trying to make is you could have swing traded this, where you saw a gap like this. I mean, look, it dropped from 1465 all the way to $5. But why did that happen? Because of the catalyst, because of the gap. This gap, right here, this gap literally ended a long-term trend and it started a new trend. And because that it started a new trend, you know, we continued lower, and it could have been an amazing short opportunity as a swing trade where you know, maybe you found a setup somewhere in this area on the, you know, maybe on the hourly chart, maybe you went short underneath these candlesticks, stop loss above here or stop loss above here, whatever the case is. We don't have a perfect setup here, but you guys get the idea. This gap literally ended this long-term trend, started a new trend, and you could have gotten in at the new start of the trend because of this gap. And I mean, this thing literally dropped, I mean, in, what is that, 65%. And what? This is daily. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're talking about weeks. Weeks, it dropped 65% because of this gap. And that's another way you could use shock value type of gaps if you're a swing trader or even a long-term trader. Hopefully you found this video super valuable. And if you did, make sure you subscribe to the channel. Make sure you leave a like and leave a comment on your feedback. And if you're someone who is serious about becoming a full-time trader and you want a hands-on mentor that you could trade live with every single day that guarantees results, I personally scale and coach my traders from zero to making tens of thousands of dollars a month with trading. I have students that make anywhere between 10 to 100K per month. I would look at my student interviews. I would also follow my Instagram because I post my student results literally every single day. And the way that I'm able to help my traders go full time is because they learn how to trade by doing it with me. I share my screen every single day. I trade live with my students every single day. I'm live on the mic, hands-on mentoring 3 to 6 hours a day. And that is the reason why my students get such life-changing results. It's because they're learning how to trade by actually doing it. And not only doing it, but doing it with a profitable mentor that has been doing this for close to 5 years. And of course, my father, who mentored me, I know the power of mentorship because my dad mentored me. That's the only reason why I'm successful today. He's been doing it for close to 10 years. So if you're looking to go full time, you're serious about making this a career, I would book a call in the description and we could see if you're a good fit for the mentorship. And I guarantee results. I guarantee that you will be making 10 plus thousand a month every single month. I work with you until that happens, guaranteed. You remain in the program until you're a profitable trader, guaranteed. So if that sounds extremely interesting to you, I'd love to see if you're a good fit for the program. I usually cancel around 77% of the applications that I get because I only like to work with serious traders who have a high probability of success. I'm selective with who I work with because I only like to work with people that are disciplined, consistent, that are going to work hard, and that are serious about the community. All right. So you can book a call below. We'll see if you're a good fit, and either myself or a team member will reach out to you and we'll see if I can make you a consistently profitable trader. Hope you guys enjoyed this video. Have a good day, everyone, and we shall talk very soon.